now in terms of monetizing, that's a great market to be in. You can't charge the same fee here in Pakistan.
Like there is a lot of, for me, technology going to be infused everywhere. It's going to be like electricity.
When I talk to people in their 20s or even younger, they don't have any confidence in the Pakistani economy.
It has a lot to do with the culture that we have.
Like keeping a salary of like, I don't know what are the salaries here, but of maybe $700 or $1,000.
I'm Sara, just like for those who don't know me. I'm an entrepreneur in technology. I have an industrial engineering background. Born and raised in Morocco, and I'm settling in Pakistan now. That's the main headline of this adventure. And I've been spending the last 10 years in Paris in the tech ecosystem, mainly with Station S and so. I've built an education technology startup that failed after 2 years, but was with a lot of learning coming. And actually, what I wanted to share with you today, it's like, it's that hope, I will say, of the Pakistani ecosystem that I've been discovering the last 4 years. I was back and forth between Pakistan and Paris. And what really actually triggered me is like the potential that this country has. I know that there's a lot of talent, there's a lot of opportunity, it's a huge market. This is something that really attracts me. In Morocco, we are like 37 million, so it's like Karachi plus. But here it's like a market of 250 million people that I feel it's a huge opportunity for like technology to thrive, to create value, and also to be able to build like really successful tech companies without being obliged, I will say, to get to other market. Yet we're gonna explore that we can go to other market. So Wasssl is a platform actually that for me is gonna promote the ecosystem in Pakistan and bridge it with the Middle East in terms of market expansion, attracting investment, and also talent mobility. And our mission through this platform is really to build that first layer of knowledge that will help tech entrepreneurs navigate through the region. I've been like in the region, like in Middle East, Saudi Arabia, UAE, the last 2-3 years, and I feel like there is a lot of opportunity to grab. I know that Pakistan also has that objective of being like reaching $25 billion in terms of tech export. So this is something that startups and tech-empowered companies can contribute to. So this is it. I don't want to get too long, but I'm inviting Shershah Hassan that will take a panel discussion with me. He's founder of KalPay, which is a fintech that's been operating for more than 4 years in the Pakistani ecosystem, and maybe they will go somewhere else soon. So I will make you join in this panel, and it's the other side. Oh, you are quite tall, actually. You don't need. Thank you, Shershah, for joining me. Maybe you can just like. So I don't know, maybe there's some people that already know you, but you've been doing, mashallah, great job the last 3.9 months, years, right? This is what I calculated in KalPay. I want just maybe a little introduction of what KalPay is doing, how you're going to explain it to a 6-year-old boy or girl. Okay. Very simple. Maybe there's like, not everyone is like familiar with what fintech, how fintech works and how fintech goes. Fintech is like finance technology. Yeah.
Thank you so much for the introduction, and thank you so much everyone for being here. So KalPay's journey almost started 4 years ago, 3.9 years, like she said. So essentially what we do, or how I would explain this to a 6-year-old kid is, we do consumer financing, Sharia compliant consumer financing. So around 4 years ago, we started off as a pure play, buy now, pay later. So what we were doing over there was, whenever you went on an e-commerce website, you could purchase any product up to 15,000 rupees in 3 installments at 0%. Now this is back in the days when Klarna, Afterpay, and Affirm, they were doing really well globally as fintechs. Now over time, we sort of pivoted away from that. We still do consumer financing, but it's now more focused towards other products. So we have two verticals. The first one is KalPay Talim. We do education financing, so it's study now, pay later. So these are short-term loans, not the typical education loans that you see in the Western part of the world. So these are like up to 9 monthly installments for any fee that you have to pay. Can be at a university, can be for any professional learning course. So we have around 15 to 20 different institutions in Lahore that we are working with, including LUMS, UCP, UET, UMT, so all the colleges, a few medical colleges as well, and then a lot of firms that give professional education. And then any course that you need to do, any exam that you need to take, like SATs, GMAT, we'll finance it for you. So our goal over there is that if you need to study, financial barriers should not be the reason you can't do that.
Definitely, definitely.
And then we have another vertical called KalPay Rasai. Over there we do productive asset financing. So we are financing smartphones for freelancers, for gig economy workers. We're doing laptops. We're doing solar for people's homes as well, and electric bikes that we have recently started doing, and travel financing too. So
that's a lot of things.
Anything and everything sort of that you can think of under a 1 million rupee limit, we'll finance it for you up to a maximum of 12 months. So in a nutshell, that's essentially what we do.
Okay. And how you come with that idea? I mean, like, what was the problem? What triggers it? Because you built it at LUMS, right? It's like kind of a spin-off of a university. It's like Google was built in a university in the US.
Yeah, so this is around 5 years ago now. Time flies. It's been a long time when I actually came up with the idea for the first time. So I was doing my undergrad at LUMS, and we were doing a course on fintech. And that's where we were identifying the problems that we have here in Pakistan. And even 5 years from then, the problems haven't changed. And the core fundamental problem was that we have a very big underbanked population. So what we mean by that is that people have access to basic financial services like a mobile banking application or a bank account or a wallet, but they don't have access to credit.
What surprised me at first when I arrived to Pakistan 4 years ago also, I've heard that like there is, in one household, there is one bank account.
Generally, yes. Yeah.
I was like, so, how happened?
Around 40% of the adults still in 2025 don't have access to financial services in Pakistan.
Right.
And that's a big chunk of the economy. And if you split that between men and women, it gets worse
with women.
With women. So that was the problem that we identified. And when you look at the credit card number, there were around 2 million credit cards in the whole country of 240 million people. Now, when we compared that to global numbers, the eastern side of New York, not the whole New York, just the eastern side of New York had much more credit cards compared to
whole Pakistan.
So that was the problem that we identified. It's still pretty much there. People don't have access to credit, which I think for the consumer in today's day and age is a basic necessity, because it's not just about taking loans for consumption, but more about taking loans for necessity, which is education, which is a smartphone. For example, we work with Food Panda, we work with Careem, we work with InDrive. All of their riders, they need access to a smartphone because they can't work without that. So, this is about financing necessities rather than consumption. Yes, we started off by financing consumptions when we were doing BNPL. So, we were doing anything from clothes to supplements, etc. But now it's more impact focused. It's more around products that are actually productive in nature.
Okay. And what is like building a product in such market? I guess it's like, it's an emerging market.
Yeah.
Data is not there. Not much.
Certainly.
Data is not there. Information is hardly to be found.
Yeah.
How you can navigate and build a product, a relevant product, because it's a huge market. You cannot talk to 200 million people neither. So how you will build and understand what product is needed for this specific market in the fintech, of course.
Yeah. So I was talking about this at Leap as well. I think you were there last week.
Yeah, we met at Leap actually last week in Riyadh. That's where we met.
A similar question came up, and my answer to that was we don't really need to overcomplicate the solutions that we are building. So when you talk about emerging markets, they're brilliant in terms of the scale that they give you. Markets like Pakistan, like Nigeria, like Bangladesh, Sri Lanka. But the challenge over there is, or rather an opportunity is, that the problems that we have, they're still so basic in nature. I'm not talking about using Web3 or AI to build fancy tech. All I'm trying to do, all other companies are trying to do is just solve those very basic problems that consumers over here have. So whenever you thinking about building a product, what a lot of previous startups did was they took an idea from the Western market. We were discussing about, you're talking about this
earlier,
30 minutes
exactly.
ago. They took these ideas from markets like the US, from Europe, and tried to bring those to Pakistan. You need to find pain points that are very local, and you need to localize your solution as well. Otherwise, I don't think you'll be able to, succeed or build a proper product here. So, the pain points are there. There are a lot of pain points.
There is a lot of pain points.
That's a good point, right? And that also means there's a lot of opportunity to solve them.
Definitely. For me, all markets such Pakistan that has a lot of problems or a lot of challenges, it comes up with a lot of opportunities also and a lot of solution to suggest and address for this market. So you didn't look at any other startups. I mean, you've got some inspiration from other countries, maybe Nigeria, as you said, or from similar. So just okay, how I'm gonna build this, what they have done, how they build their products, how their go-to market maybe.
I actually did what I just talked about that we shouldn't do. I took,
every first-time entrepreneur do this at some time.
So we took Klarna as an example, as an ideal, because Klarna at that time, this is back in 2020, Klarna was actually the biggest fintech in Europe, valued at around $32 billion. It's another story that their valuation came down to, I think, $3-4 billion after a few years. But at that time, buy now, pay later was doing so well. We had Affirm, we had Afterpay. I think one of the Australian BNPLs, I think Afterpay was acquired for around $25-30 billion as well.
Right.
So that was the market to be in. And investors were throwing money in this field like crazy, right? So we copied that model and brought that to Pakistan like it was working in Europe. Did not work because we did not understand how underwriting in Pakistan would work. We did not understand why Klarna or Afterpay were doing so good in developed markets and why that same exact model could not do well in Pakistan because, we were all in, and we still are, all about...
And you start building the product according to Klarna, and
exactly
then you feel like it's not working, right?
Exactly like that. The whole process was exactly like Klarna used to do it. You'll go on an e-commerce store, you'll, choose any product, like, let's say, this jacket. Costs around 15,000 rupees. You'll go on the checkout page, you'll select KalPay as a payment option, add in your card, save that, pay 5,000 upfront, and the rest will be deducted automatically from your bank account. No other underwriting was being done by us, initially at least.
Right.
Just based on the idea that this is working and other markets should do well in Pakistan as well. But, when I started building this, people used to say that Pakistan is a country where you don't trust your friends or even colleagues with money. How would you do this with strangers? And I used to take that very lightly because the same model was doing that again so well in other markets.
Because there is a lot of cash on delivery also in this country. I don't know, 5 years back, it's maybe it was 70 or 80%.
More, actually.
More,
yeah.
90%. So people don't trust, we're paying online.
Exactly.
So they won't trust a buy now, pay later neither.
So it was, us trusting them. So in our use case, it was more about us trusting the customer because I am giving out a loan, right? So how do I ensure that customer pays back? And just saving their card details was not enough, certainly, in our use case. So we, I don't try to hide those numbers, but, we had massive defaults. People weren't paying back. And that meant we were incurring a lot of losses. So we pivoted away. We said, okay, we won't. And this was being done instantly. So when you were on the e-commerce checkout page, you were giving out a loan or taking a decision in 2 to 3 minutes. But that didn't work out well. We pivoted. We understood the market well. We looked at how local banks were doing. Of course, you're much quicker than them.
How long it lasts this before pivoting and understanding this? This is not working. 1.5 years. Yeah. Losing money and so.
Yes.
Oh my God. Okay.
So not the best way to do it. I think that learning.
It's a way to learn.
So, it's okay to learn, but not at the expense of your investors' money. And that's something that I still am not that happy with. So that learning part should definitely come in before you start building what you're building.
And I actually want to ask you about a more general perspective today. You've been in the 4 or 5 years in the Pakistani ecosystem. What is your perspective on it, in general, in terms of the community, how the startups are growing? What is the potential of the market, maybe opportunities and challenges? What is the general overview of you as an entrepreneur from the ecosystem?
So I look at it from a perspective that in terms of the number of users, this is actually one of the best markets to be in. Up until recently, this was the biggest market for Careem as well in terms of the total number of users that were using Careem.
Which is like the biggest success story in the region,
yeah,
Careem.
That's true.
And it comes from Pakistan, just like a little reminder for everyone.
It actually was headquartered in Lahore. And the same goes for InDrive as well. This is one of the biggest markets for them. The challenge, however, is how do you monetize it? And that's something that a lot of startups failed to do. So when you're looking at this market, you need to keep in mind that the average consumer, they don't have a lot of disposable income. That's the first thing. And they're not willing to pay a premium for a service that you're providing, right? So, let's take the use case of Airlift. When they came in, as a ride-hailing service, they started off at like 50 rupees, which was great. 50 rupees for a ride from here till Barrier made perfect sense to me. The minute they increased those fares, their usage dropped massively. The same happened with all of these quick commerce companies as well. So they were giving massive discounts.
When they stopped
doing that, when they started monetizing that service, they realized that the consumers in Pakistan, they don't want to pay an additional 100 or 200 rupees for that service. When I go to Saudi Arabia, when I deliver food from Talabat or Hunger Station, I think Talabat is not there, it's Hunger Station, it's called Hunger Station there, they charge me additional 15 to 20 riyals for that delivery. Now,
that's quite a lot, actually.
That's quite a lot. That's around 1,000 or 1,500 rupees. Now, in terms of monetizing, that's a great market to be in. You can't charge the same fee here in Pakistan. And that's been the issue with a lot of companies that tried to expand here. A lot of Egyptian companies came here, a lot of other foreign companies came here. Pakistan was brilliant because the growth was crazy. Then again, we have 240 million people. But in terms of monetizing that, it's a big challenge.
So it's just like you need to keep that average, or like you cannot go premium actually in a Pakistani market.
Yeah.
That's what you understand from all this.
Yes, that's my
So don't build premium products.
So
like build premium products, but like with not premium pricing. Just like keep it low.
I mean, see, the thing is, there will always be a market for premium products, right? But generally, the kind of pain point that you're trying to solve, that's not for the premium
market.
It's
like for the masses.
Because it's not a pain point for them, it's for the masses. But then the masses don't have the disposable income to pay for your service. So the biggest challenge over here is, and what a lot of startups fail to do, how do you monetize?
Find that sweet spot that's
in terms of
good
monetizing
product
the services.
And having
Exactly.
That's good pricing strategy, and don't make that mistake of going to market like low, then you raise, then it's like you're gonna lose. That's the strategy of Yango.
Then again, Yango comes from a different perspective altogether. They're one of the largest ride-hailing companies globally, InDrive and Yango. That's what InDrive did as well. When they came to Pakistan, they were not charging or taking any commission from their captains
or their
users.
To the market.
But then again, InDrive is huge, right? They can burn that sort of capital. I can't, or other startups that are raising funding, who have raised $1 million or a couple of $1 million, they can't afford to do that.
Of course.
And that builds a premise of false product market fit. Because initially, when you're giving massive discounts, it's a high user growth. People are using your services, and that makes you think that there's product market fit, and that's what your investors, that's how your investors look at it as well. But then eventually, when you start monetizing it, that's when there's a big drop off, and you can't make a sustainable business out of it.
And that was also part of the challenges that Airlift, for example, happened. So they have like that big traction, so big valuation, so then they couldn't raise afterwards the money and keep that growth. So for us, it's like very tricky in the Pakistani market to like not overvaluate from the beginning.
I think that's a problem with a lot of bigger startups right now.
Or like emerging market startups.
In all emerging markets, because we don't have capital for proper Series A, Series B rounds. And that's why you see a lot of them.
Locally, no.
Locally, no. So that's why you see them expanding into other countries.
Right.
But what happened during the golden era of Airlift was back in 21, the initial pre-seed and seed level valuations were so high because the market at the time was going crazy that they could not justify their valuations for Series A because they did not have those sort of revenues.
The metrics.
So, if you're talking about a 10x or even let's be very, very generous and let's talk about a 20x multiple on a company's ARR. If you don't have those sort of revenues, you will never be able to justify
ARR,
that valuation.
It's annual recurrent revenue. in case.
So that was a challenge. That's been a big issue.
I had a question, but it like popped up out of my mind. So yeah, I was talking about funding and bootstrapping. You've been doing both. So
Yes.
what was the journey in terms of, because like, there is some startup that will like run into the money of investors at the very early time.
Yeah.
There is some others that will do the bootstrapping job. You have done some mix. You try to work with some investment money and also work with your own revenue, which is a really good strategy. What is your insight regarding like how a startup should go in Pakistan, maybe regarding the funding?
So talking about our journey, we raised our first check in 21. We announced our round last year, actually, I think in around April 24, but we haven't raised any more capital after 23. And we've been trying to sustain our own our business with our revenues, like you said. When startups generally come to me, I tell them that there's nothing better than bootstrapping your business. The issue with our business model is it's a very capital-intensive work that we do. So for every loan that we are giving out, there needs to be some capital that's going to finance that loan.
You need a lot of cash in the company,
yes,
so to be
able to fund that
to get that loan
or to be able to fund that transaction. So if the unit economics of your business, they make sense, for example, you're selling a product and you're making money on it from day one, of course the growth is going to be much slower, but there's nothing like the kind of independence and the freedom that you get when you don't have, or when you're not answerable to investors. Because when you have investors on your cap table, just keep in mind that how do they look at their investment and what their perspective is. And they're looking at this from a 5 to 10x exit 5 to 6 years from now. And that requires a lot of growth and a lot of money to be burned. And in all of that, what people sort of don't keep in mind is how that will affect the unit economics of the business that you're doing. So bootstrap it if you can. Don't raise debt. Don't ever do that. We have a lot of debt on a balance sheet, but then again, that's the nature of the business that we do, right? We have to raise debt to give out more loans, but then again, we are a financing company at the end of the day.
You are in debt while giving loans to other people.
While giving loans. So, I'm indebting people and I'm indebted myself, so it's a tricky...
It's a game.
It's a tricky equation, but that makes sense for a financing institution. But don't raise debt till you are cash flow positive. And I've seen that hurt, and I've seen a lot of startups close down because they were premature in raising debt. So bootstrap it, that should be the first go-to strategy. Raise equity investment, stay away from debt at any cost that you can, unless you're a Series A, Series B, proper serious business that's making profits and it's profitable at a net level.
What will have make your life easier the last 3 years as an entrepreneur here in Pakistan? Regulation?
Working in a corporate.
No, not that.
Not building a startup.
We have the virus of entrepreneurship, so it's like we are dead.
So in terms of, I think, then again, I might contradict what I just said about capital. I think for us, being in the lending space, access to capital is a big challenge. And I was at a
local capital or
local
whatever.
Capital,
okay.
Local capital, because I look at it not from an equity perspective, but from debt injection. So I was at a fintech roundtable last month or back in December in Karachi, and this was the core focus of that group. We had multiple NBFCs and other fintechs and a few representatives from the regulator, from banks. The challenge is that you don't have access to quality local capital when it comes to debt primarily. So for me, as a fintech founder who's in the lending business, I don't have access to credit lines from banks. I don't have access to credit lines from other financial institutions. Now that becomes a big bottleneck.
So you manage it yourself, actually.
I mean, we do have some debt on our table, but it's not at this. So, we recently saw, I think, Tebi or Tamara, which is a BNPL in Saudi Arabia, get access to like $50 or $100 million credit line from JP Morgan, right? So that's like serious capital. That's the kind of capital that you need
to be able to
every day.
Build and grow a lending business. But that continues to be a challenge.
So here nothing is existing, or there's like
Banks,
the small
big
amounts.
No. There's a startup that's very similar to what we do. They've raised equity investment from a bank.
Pakistan?
In Pakistan,
Okay.
but from what I heard around a couple of weeks ago, they still don't have access to a credit line from the same bank. So the bank went, here, take our money, we'll put in equity investment, but they still don't have access to a credit line. Now, in our...
So the startup can die meanwhile, actually.
I mean, the startup probably won't die, but it can't scale, right? Because in our line of business, we need a lot more capital compared to any other fintech or any other business would need.
You didn't get to the easy business actually.
Yeah, it's a very difficult
It's
business
a suicidal.
to be in. Lending in Pakistan is actually, would I do it again? Probably not.
No.
Because it's a very challenging business to be in. When you're underwriting loan, of course, you don't get 100% of your payments up front. You need to recover that money. There are a lot of other challenges with it. So not the easiest business to be in at all.
And what you see the potential of fintech? I mean, like, what are the subsectors that maybe can be relevant for like wannabe entrepreneurs to work on the next 1 or 2 years? Where it goes now in Pakistan for you?
I'm of the opinion that every company would eventually become a fintech, and every fintech would eventually become a lending company. And the reason I say that, we have seen that happen already. WhatsApp is a fintech now. Meta as a whole is a fintech now.
Much money, yeah.
We see a lot of other companies
as long
globally.
as it's money machine, actually.
Yeah, because they have access to a lot of data and they can capitalize on the users that they have. But they eventually need to do lending, because I believe that lending is that particular use case within fintech that makes money. There are a lot of companies that have tried doing payments in Pakistan. The challenge with payments is how do you monetize it? Because on every single transaction, you're making a point something percent. And for that to make sense, you need to have a very, very big volume. And in order to have that sort of volume, you need to have a huge user case that's transacting, right? So payments in Pakistan probably wouldn't make a lot of money. But lending certainly would, because you have those sort of margins. So whatever you're doing, even if you're building a wallet, if you're building a payments company.
I was thinking that neobanks and wallets, I don't know, Gen Z today I'm struggling now. I don't know which bank account I'm going to open.
Yeah.
Because I don't know what's happening. I don't feel like with the traditional banking, like opening Faisal Bank or Mizan Bank, I'm like not feeling, I don't identify with these big banks.
Yeah.
So I was like thinking like neobanks and Gen Z kind of banking, having wallets can be like of a lot of potential. We're talking about 63 or 65.
SadaPay came in, NeaPay came in, brilliant growth. SadaPay got acquired recently as well. But then again, they were an EMI company. They can only do payments, right? So they can't do lending. So the only revenue line that they have is when I transact or use a card.
Right.
So they make a certain percentage out of that transaction that's happening at around 0.3%.
And they are also limited actually in terms of
the services that they can offer. So it's not a proper bank. It cannot offer core banking services, and it cannot even use the deposits that it has to invest that capital outside. I think the max that they can do is around 5% of the capital, 5 to 10% of the capital that they have. So digital banks is a completely different ballgame. We have around 5 licenses issued so far. The first one is live, which is Easy Paisa Digital Bank. And now that's a completely different product from what SadaPay is offering. A digital bank can offer you loans, they can take deposits, they can offer all other core banking functions that a consumer would need. So now that might be a use case that would make sense.
Otherwise, you need to have on your phone like 10 apps that everyone do different service. This is loan, this is digital wallet, this is okay.
So in terms of fintechs, that's generally how I look at the market. I think remittance is a big industry. Because we have around $25-30 billion coming in.
30 billion, yeah, exactly.
Every year.
That's the money that we track, and there's maybe 30 billion not tracked.
That's what keeps our economy up and running, essentially. So I think that's a very exciting segment to be in. And there are a few companies in Saudi Arabia that are trying to digitize that. But yeah, generally, I think lending certainly might be a very difficult business to be in, but in terms of the margins that you have, commercially, it makes a lot of sense.
Okay, great. I was thinking about having also your thoughts about expanding. Are you like thinking only about the local market? Is more than enough for you? You've been in Saudi Arabia the last 2 years. What are the potential of like Pakistan startups maybe expanding to the Middle East? I see that there is a lot of potential. We've seen Abhi going to the UAE.
And
last
Saudi as
2
well.
or 3 months, Saudi Arabia COLABS are going to the Saudi Arabia soon. So there is like this vibe, and I think that is very healthy for the ecosystem to really also, because there is a lot of money devaluation here in Pakistan, and it's a huge problem. It's like I know that the last 2 years it goes from like $150 to $300 to PKR. So. How you see it? Do you see like KalPay expanding? How the startups can go like in a more responsible and enlightened way to the other markets?
In order to understand why, so I am a big supporter of the idea that have your back office in Pakistan and build a product for global markets. Build something for the
or
US
at least regional market.
Or at least the regional market, because the costs are going to be super low, but when you monetize it in a country like UAE or Saudi Arabia, it's going to make perfect sense for you. So, and you'll be very competitive. There are a few companies that are doing really well in Saudi Arabia, actually. MedIQ is one of them. I think it started from Lahore. They have their back office here, but in terms of most of their growth, that's coming from the Saudi market, and they're doing really well because they're able to monetize that properly. But why do startups generally have a need of expanding regionally? That's, in most of the cases, that's not because they have captured the local market properly, because they need to justify their valuation. And we saw that happen with Airlift as well. They expanded to South Africa. I mean, I'm not going to go into details of why or what they were thinking at that time, but the only reason they had to do is because for the next round, they needed to show that they were a regional or an international company. Now they were expanding in multiple markets. Had they captured the local market fully? No. Has anyone else captured the local market fully? No. So for us, how I look at, because I hopefully will be, and we should be able to sustain a business with our cash flow, so we don't have that sort of a pressure that we need to expand regionally, because we don't need to. We have a huge market in Pakistan. KalPay is just that drop in the ocean of people who still need a lot of financing. We still are not able to fully meet the demand that we have because of limited capital that we have. So there's no point, there's no need for us to expand regionally in the next few years. We are primarily operating in Lahore. We are doing some business in Karachi and Islamabad. Then again, there are so many other cities that we still have to expand to. And in terms of the use cases that we have been working on, we're just doing a few use cases. We're doing education, we're doing products, we're doing travel, but there's still so much more to do. So I don't think there's any need for us to prematurely expand into the Saudi market. Then again, for a fintech to expand into the regional market, the challenge is it's very expensive.
Regulation, I guess.
Regulation. And that makes it very expensive. So the regulators are generally slow. They're going to take around a year or two for you to get your license, but in the meantime, you start incurring the expenses. So you need to hire a local team, you need to fulfill all their regulatory requirements. So unless
you have an investor there, for example,
unless
you have
like $5, $6, $7 million raised already, it wouldn't make sense for us to expand there. So we're very bullish on Pakistan, regardless of whatever's happening at the macro level. I think there's still a lot of work that needs to be done here. So you'll see us in Pakistan for the next few years.
Thank you very much, Shershah, for this discussion. I don't know how much time we took. It's like maybe 40 minutes or something. I think we're going to take some questions maybe from the audience. If you have like anything that you want to ask about either the fintech economy or what Shershah have been sharing, or I don't know, or random questions.
Any question would be encouraged.
Yeah. It's like everyone is like, someone has to start, so otherwise the others will like won't be.
Yeah, someone needs to volunteer first.
And they will be shy to go for that.
Yes.
Yes.
My name is Sara. I'm just breaking the ice because no one else is asking a question. So in Pakistan, entrepreneurship is a very difficult word because we don't have a lot of trend except for maybe opening a restaurant. Maybe we have a very traditional idea of entrepreneurship. And for someone like me who's from the middle class, we're all very scared of being an entrepreneur. We all go into safe fields like, becoming a doctor, becoming an engineer. So do you see this changing in the next 5 or 10 years? Because I'm in my 30s. When I talk to people in their 20s or even younger, they don't have any confidence in the Pakistani economy. And I've come here all the way to listen to you talk because you are doing it. I'm sure you are surrounded by lots of people who are doing it. So how, do they have generational wealth? Do they have a safety net? How, because when you start something new, you need to be brave. Is that trend changing, or is it still the same thing where people with generational wealth are going out there and being entrepreneurs in something which is new like fintech? And people like me without generational wealth, will we always be averse to becoming entrepreneurs? Yeah, is that changing? Do you see it changing in people around you? That's my question.
I will let you, Shershah.
An honest answer, most of the startups that you see raising big rounds, all of those founders, they have generational wealth. Even if they come up with a very cute, nice
Even
story
in the
of...
US, actually. Ooh.
Yeah, so even if they come up with a very nice, cute story of them working hard or working at 3 a.m., I know a lot of them and they are filthy rich. So they have a very, very, rich background.
They have that safety net, actually.
They have that safety net. I'm not one of those, by the way.
You have an example now.
I come from a good background. I had that safety net. The reason I say that is because I started doing this very early on. I don't have those kind of responsibilities. I'm not married happily, alhamdulillah, so far. So, I don't have those responsibilities on me. So it's more about, so there are two things. It's when you look at it personally, do you have that appetite to take on that risk? When I graduated from LUMS, I worked for a US company. We used to do marketing in the mortgage industry. I did that for 8 months. But then again, I did not need that monthly income at that point in time because I had that safety net. If I didn't, probably I wouldn't be doing what I am doing. So that's certainly there because this is a big risk that you take on. So my general advice always is you get into this when you have some savings with you because you should be able to sustain yourself for the next 6 to 12 months. So even if this doesn't work out, you still have some money that keeps you going, based on whatever your situation might be. That's the first. And the second thing is it has a lot to do with the culture that we have. We are, from day one, we are never allowed to fail in our lives. And that's, I think, bigger than the safety. I think that's a bigger reason than the safety net because from day one, when you're in grade 1, or from when you're in grade 2, you're always told, if you get 96% and the guy next door got 97%, your parents will never be happy with that 96%. And that's, that's the use case in almost every single household. So you're not given that room to fail throughout your life. So whenever you're starting your business, you need to keep in mind that there's a high possibility of this failing. Even for me, 4 years into it, will KalPay be there 2 years from now? I can't say that for sure, right? So, there's a big chance that things might not work like we planned on them, like we have planned. Can be because of internal reasons, can be because of macroeconomic reasons as well. So, it's about what we have heard throughout our life, that you can't fail. I think that's the biggest issue that we have. But more success stories coming out of this country, that's certainly going to change the trend. I see a lot of people talking about entrepreneurship. For me, entrepreneurship is never about building an AI or a tech company. It can be, I look at that guy who opened a tandoor in a locality as an entrepreneur as well, because he took that risk, probably left a job somewhere and saw an opportunity, saw a pain point, came up with a solution and is doing that. So an entrepreneur doesn't need to be tech savvy, doesn't need to be a graduate from IB or LUMS. Any pain point that you're solving can be as traditional as you may think, like probably something like a restaurant. You're still an entrepreneur because the journey that you go through, that the risk that you take, it's almost going to be the same every time. So that is certainly changing, and the only reason that's happening is because we have seen some success stories coming out. We have seen companies raise capital. We have seen founders doing relatively well. Of course, we don't talk about the failures as much, but and I think that's something we need to talk about a lot more, just to sort of understand, the journey that you need to go through to get there. But certainly, it's changing, and over the next 5 to 10 years, I think there's going to be a major shift in how people look at entrepreneurship.
And actually, I would just add, for me, like in such a big market, there is 250 million people, governments or corporates cannot have jobs for 200 million people. It's impossible. It's like we're talking about young people, it's like 65%, 18 to 30, I guess. And for me, entrepreneur also is like creating your own job, creating your value for yourself, even maybe just for your family. And the circle goes wider and wider than you will create for your neighborhood, for your community, for the country, for the region. That's how I see you can scale as an entrepreneur. As Shershah said, like even having a restaurant is like, you are an entrepreneur. It's just technology, what enables, it's really having that product that can go fast and scale fast and go to everyone's phone or laptop. And it's for me the next, it's already the revolution that is happening. After the agricultural revolution, there is the industrial revolution. Pakistan is still a big industrial country, but there is a shift definitely happened that will go actually on the technology and data industry with all what is happening now with AI, with big data revolution, I will say. The IoT is coming, Internet of Things. So we're gonna track everything everywhere, even that chair, like will be tracked, like how many time was occupied in the year, or I don't know, in cinemas or whatever. So like there is a lot of, for me, technology gonna be infused everywhere. It's gonna be like electricity. Maybe 200 years ago, it was like electricity. It was like something weird to have somewhere, but technology gonna be infused like electricity, like water, everywhere. So it's like a way to really take benefit on building things. And I think everyone will need to learn a little bit of technology. Even a restaurant, he's struggling with like having clients, promoting, creating, I don't know, a page for his services. So it's like, for me, technology is infused everywhere. And I will talk just very briefly in 2 minutes about my background. I never imagined being an entrepreneur. I learned, like maybe most of you, that you need to be an engineer or a doctor or a lawyer to be successful. So I've done this. So I did the industrial engineering, and then I was just dreaming about being like a big director in a company, and I will scale. But the corporate world was not for me. And this is something that I discovered after 5 years working in corporate worlds in Europe, changing my job every 1 year. It was like I'm getting bored very fast, and that's why I love actually about entrepreneurship. It's like you don't know what you're gonna do tomorrow. You don't know what you're gonna do the next week. So for us, it's like having that kind of roller coaster that is not easy to manage every day. To be honest, sometimes you are really low that you wanna quit, but you don't. And you can't, because maybe you have people working with you, you have maybe clients relying on you. So there is some point that just like you need to keep going. And I think when you grab the virus, you can just like, you'll just keep up going and doing things. And actually through Wasssl platform, that's what we are trying also to build, to have this education, to make people understand how far they can go into entrepreneurial technology and innovation ecosystem, and also share the success stories, because I think it's not shared enough, and the failure stories also there, because they are not shared enough. And building those insights, because I think we are in an insight-based ecosystem instead of data-based ecosystem. US and Europe has been building their data for the last 40, 50 years, which we don't have in Pakistan or either in the MENA region. So I think that we're still in an insight-based ecosystem, so we need to be close to the ecosystem, creating these communities. We need maybe 1,000 of initiatives that will build this awareness and make people step up. Most of people, they will stay 10 years afraid of stepping up to things, and they will just like have their life passing by, and he's 40 or 50 and they're like, okay, I wish I could have done this, and just like they stay like kind of a slave of a situation they don't want to. So for me, like entrepreneurship also, it's a freedom, but it comes with a huge cost, working on weekends, working on, I don't know, nights, day and nights, and also having a lot of resilience, as Shershah said, because you're gonna fail thousands of times before like making it happen. And it's for me, it's like a muscle, resilience. It's just like going to the gym, and as long as like you are building it, you're gonna go farther. And those who succeed, people who succeed, are those who don't give up. And to me, like there's no secret sauce. But of course, you need to be ready to have the right compromise and the right risks. I don't know. Like, thank you for your question. Anyway, anyone?
So I'm from Pakistan. I won't be here forever. True. I'm surrounded by people who are smart. However, I'm in healthcare. People around me are smart. They're stuck in cycles. They have ideas. They also have a team who want to change things, because my country is probably the 4th biggest population in the world. So we have a lot of problems. Is there a place or a person with a good idea and a good team can go to? Okay, I have a good idea. This will solve a social problem. I just need a year of funding. Who can they go to? Okay, look, I need some money. give me 6 months where I don't have to do a job. I'll open a small thing and I'll start paying you some money. Maybe I'll see profits over a year. Is that something which is available in Pakistan? Is that something which is done in the world? And if it's not, then where do people like me who are not from tech or finance go to learn about how they can start a business? I don't want to learn about how to open a restaurant, how to open a shop. That is being done by everyone. We need to start doing new things because we need people to have work apart from a traditional job. It's very sad that we are all fighting each other to earn a job of 60K a month, right? So where do people go to find funding? Or if they don't know how to run a business or start a new idea, where do they go? Where do they learn? Like not everyone can come and talk to you or come to COLABS. So do you know people who are interested in
You go. Yeah, just
are
like
there rich
about
people
how
willing to fund younger people who have a good idea?
See, that's
how you can,
that's
it's
fundraising
about
101,
education
right?
and funding, right? Education and funding, because there is a lack of education in how to start a business and how to build it, and funding, right? At the first stages. You can go and then I will.
That's fundraising 101. Will an investor ever fund your 6-month expenses? Probably not. And you need to understand why, because an investor is, then again, there are multiple different types of investor. So you need to really understand what is it that you're building. If it's something impactful, then you need to talk to the right investors who fund impact-based use cases, right? So impact investors don't care about the return that they'll get, and that's where you have a lot of grants, right? USAID used to do it a lot up until like 2 weeks ago. There's agencies like Karandas, Accelerate Prosperity. Then again, they gave out loans, but I think they gave out grants as well, and multiple other foundations like Bill and Melinda Gates. But then again, the product that you're building should have a social impact as a core focus, right? Only then you'll be eligible to get funding from them. But then again, will they fund a basic idea? Probably not, most probably not. Unless you are a Mudassir Sheikh and you have already sold a company for $3 billion, then probably anything that he comes up with, investors are gonna be after him. And I know of a lot of founders who say no to investors, because they're like, we have been oversubscribed already. But then again, they have that sort of, either the product is amazing and they have had great traction, or they have a profile that, that's brilliant. They have exited already, et cetera, et cetera. So whenever you want to raise funding as an early stage founder, unless you have an exceptional profile, which probably only 0.5 or 1% of the founders would have, you need to have some proof of concept or a product market or some initial traction. So you need to build something, probably an MVP.
Basic MVP that costs not much.
That costs nothing, at least in today's day and age. You don't need
and
fancy technology for that.
And now you can do the no-code MVP.
With no-code, you can use AI to do, build a lot of use cases, etc. So just try to go to the actual customer that you have and try to onboard them, because that will show the investor that you have an idea that's great, but then again you have customers who want to use that as well, because an idea at the end of the day is just an idea, right? And when you talk to investors, they give no weightage to an idea. That's at 0%. Initially, when you're raising, 70 to 80% is the team, the remaining 20, 30% is traction, and over time, the weightage for your traction goes up, because if it's a good team, then there will be good traction, and the percentage of the weightage of that team keeps on going down. So you need to have a very good team with you to start off with. If they have the right skill set, if they have the right experience, then your success chances are going to go up. In terms of education, I think we have done fairly well as an ecosystem to build good programs, good incubators, and good accelerators. Probably might not be at the scale of what we see in the region or probably in the US, but those are good ways for you to sort of learn more from founders, from good trainers who have relevant expertise. We have NICs across every single city in Pakistan now. Every single university in Pakistan has an incubation center. All of them are not that great, I'll be very honest. But at least, that ecosystem is building 5-6 years ago. And, when we were studying, we did not have that. So, you have access to those. You have great programs being done by, then again, companies like Karandas, I2I. There's so many other different, startup syndicate, etc., who are willing to give you those trainings free of cost and mostly without any equity as well. So that can be a very good way for you to understand how this ecosystem works and also to connect with relevant people. So that, I hope that answers the education part and the fundraising part.
I will complement it a little bit. Actually, when I started also understanding the startup and tech ecosystem, it was, I learned it through YC,
Okay.
Y Combinator. Yeah. They have that 8 weeks training online for free that you can access to at least understand. Because startups, we want it or no, it comes from the Silicon Valley at first. Then it goes to Europe. They add a layer of impact and social impact and environmental impact on it. Then it comes to our countries, and it's like messy a little bit. We don't know where we are. But at least they can give you like a little bit of basic, as Shershah was talking about MVP, you can build product with zero as long as you have maybe a tech co-founder. A tech co-founder with business co-founders, like having this duo, this winner duo. You can build the MVP or the first product while having like that first traction of like hundreds or thousands of people with zero. So funding for me is not going to be it doesn't have to be the first blocker in your mind. And a lot of people don't step in doing things while they are maybe capable of doing great stuff because of this money that he don't have. But I agree with Shershah that like you need to have that money for yourself, at least to sustain yourself and to live comfortably. And technically, it's like by saving for like 6 months, I have like 6 months saving to live. That's what I'm doing right now. I don't have any other revenue, and I'm like investing in the business and try like, okay, let's build it for 6 months, and then we can start having some revenue out of it. And for me, like, and the knowledge of like how to build startups, I think there is everything on YouTube and stuff right now. But for our ecosystem, especially like for Pakistan or for like Egypt or Saudi Arabia, I know that there is some specificities. That's what we are trying actually to build also through Wasssl. It's like to have that education and help entrepreneurs to understand, because you cannot step up on something that you don't understand. That's why people will stay always in their zone and just like keeping a salary of like, I don't know what are the salaries here, but of maybe $700 or $1,000, and just like being limited to this salary. So for me, like entrepreneurship also is like you need to understand and you need to have a wide knowledge to be able to step up. It's like, okay, I know all the risk, I know what's gonna happen, and this is part for me of the mission of the ecosystem player, as Shershah said earlier. But I think we need like thousands of initiatives in ecosystem like Pakistan to be able to build that knowledge and create that awareness, especially among students, to be able to like create, as I said, their own jobs, at least at first. I think freelance, it's a good bridge, because you start like managing projects yourself, you start making money for yourself, and you start dealing like maybe with international clients. And for me, it's like a good stepping point to build something afterwards. I know that, and don't get, I mean, like building a startup at 20 or 25, it's very rare. Most successful entrepreneurs are like 40 or 45. So it's like totally okay. Like if you're at 25, you haven't built your startup yet or your company yet.
Yeah, just to very quickly add to that, because I'm sure there won't be any more questions from other people coming in. If you're raising your first round and you haven't raised any money before that, investors are generally okay with you working on the side as well. So you can have a job, can be a full-time job as well, because investors understand, right? And if any investor comes to you and say that, stop, working and work on this full-time, then you can actually straight away go to them and ask them, why don't you fund my living expenses then, right? So investors are always going to come to you and say that kind of BS, but you need to, of course, sustain and manage your expenses. So it's perfectly fine. What they want to see is that once you have been funded, will you be working on your startup full time? Then yes, of course, because then it's unfair to them that you've raised money from them, you're still doing a job or a side hustle and working on your startup as well. But before that, before you have any funding or any revenue coming in, it's perfectly fine to have something on the side.
Thank you very much, Shershah, for sharing your experience.
There's one more question.
Oh, yeah. Okay, go, please. They're just like girls, like the major part is like men, but only girls ask questions. Go, please.
Hi. My question is related to KalPay.
Yeah.
I want to know what strategies you and your team use to turn around the default rates, and what do they look like now as compared to a year or two before?
In terms of turning around how we underwrite a loan, I think we learned a lot from local banks and NBFCs, and realize that the reason they do things the way they do it, there's of course, and there's a reason behind it, right? So we learned from them. We saw how they operate and how they underwrite a loan, but we just do it much quicker. So most of the documents that we require, we are very flexible, of course, but most of the documents that we require, if you go to a bank for a loan, it might be quite similar. But in terms of our turnaround time compared to a bank, we'll take 24 hours, and a bank is going to take 4 to 6 weeks to process the same loan. So, we're doing or underwriting a loan like they would, but at a much, much quicker way.
My question was about default rates, because you mentioned Pelican, there were some defaults in the loans, returning the loans back.
Our current default numbers are actually in single digits. They're pretty low. Initially, when we were doing BNPL, they went up as high as 22%. And if there's any banker here or anyone from the lending industry, they know you can't sustain a lending business with that high defaults unless you're pricing it accordingly, right? So whenever you're talking about lending, you either price that risk accordingly, you're able to absorb that NPL that's coming in, but then again, in my perspective, that becomes exploitative. So we have a lot of companies even today who charge like 150, 200, 300, 400% in interest rates. All the cash loan applications, they were doing like 5, 6, 700% annualized. So for them, it made complete sense, because with that sort of margin, you can take a big hit on your NPLs as well. But for us, that's exploitative, and that's we are Sharia compliant financing company. Although Sharia compliance has nothing to do with how you price your loan or how much you price it, but it has a lot to do with ethical financing. And when you're charging a customer an exploitative rate of 200, 300%, I think that's not really ethical. So if you want to price it lower, your risk needs to be lower accordingly, and you need to underwrite your loans in a much better way.
Any more questions?
Oh, yeah.
They just woke up, actually.
Yes.
Yeah. Is it working?
Hello?
Yeah.
Okay.
Better.
Yeah. So my name is Azim. I am the founder of a data solutions company. And so speaking specifically about data, what do you feel is your biggest pain point as a fintech provider if you consider the data within your company? And how do you feel I should position my company so that a fintech like yours would want to work with me?
I turn off the mic every time, thinking there will be no more questions. But that's actually a great question. So I talked about capital being a big pain point. Talking about data, the biggest issue is data is there, but
Not organized.
it's not
organized.
regulated. It's not organized. I'm not just talking about internally. Well, for any startup, I think that would be an issue as well, because we have a lot of data. It's not as organized as we would want it to be. So of course, when you're doing data analysis, the first thing that you need to do is you need to have proper organized data. So that's an internal challenge, of course. Secondly, I think that's from a regulatory point of view as well, because the regulators have a lot of data, right? But there's no single source of truth, and we have similar things happening in Saudi Arabia. So they have applications like Upshare and many others. So if I just use your mobile phone number, I can get access to how much you earn, which bank accounts do you have. I can have multiple other data points against you as well. So the government or the regulators, they have access to that data. They just failed, because everything essentially is linked with my CNIC number. Even if I'm traveling, if I'm taking a bus from here to, let's say, Islamabad, they have access to my CNIC number because I need to submit that. But then again, are they consolidating it? No. Are they giving access to fintechs or other companies to that data? Not yet, at least. So, that's from a regulatory or a macro level, that's a big challenge. How can companies like yourself help us? I think for me, for KalPay in particular, we might not have the kind of scale that will make data analysis interesting for you. I think that's going to be the biggest issue when you're working with early to mid-stage companies, especially in our industry. Because the kind of business that we do, we don't have a lot of customers. The total volume might be high. There will be companies doing more than $1 billion or 2-3 billion rupees, but the total number of customers won't be high, so you might not have a lot of data to work on. I think that's going to be, a big challenge, especially in lending. Like, for example, if I talk about Alphala, which is, I think, the second bank. Alphala is actually the second largest credit card issuer in Pakistan. They have around less than 500,000 credit cards, right? So that's the second largest bank with the second largest consumer credit card base. So
500,000 is nothing.
Less than 500,000 customers that are using that. So compare that to a small fintech like us, we have much less data. So that might not be that interesting for you.
So what you're saying is you might prefer to hire people internally to handle your data rather than hand it over to an agent.
See, that's always a build versus buy question,
Approach.
right? So whenever you're outsourcing something, you always think about building it internally or outsourcing it. The reason I would prefer doing that because I spend a lot of time, a lot of effort, a lot of money in building this database. That's generally the mindset that a lot of founders would have. Right? So I don't just simply want to outsource, especially knowing that there's no particular way I can bound any external company to safeguard my data, right? So probably they can do anything. I'm not saying that you would do it, but generally that's the concept that we have in mind. So I spent 3-4 years building that database. I've burned money. I've spent a lot of time in building that. So I would rather hire or bring someone in-house. I think that's the approach a lot of us would take. Is it the best approach? Probably not. We should be sharing as much data as we can, so even between similar companies. But generally, that's how we think about it, unfortunately.
So if a company like mine would have hopped in at a much earlier stage, for example, when you were starting initially, do you feel like you would be more likely to have made a deal with me, or would?
But then again, at that point, I probably would not have been able to afford you. Right? So getting an intern who's studying at LAMS or studying at NAST, do that same job, because then again, I don't have a lot of data. So at that point in time, having a data company working with me probably wouldn't make sense. And I can't afford a retainer of, let's say, $500 at that time, at that point in time as well. So, they're like, with every stage, there's some sort of a problem.
Exactly.
That's there.
Cool, makes sense. Thank you so much.
Any question? From somewhere? Okay. Yeah, no, sorry.
My name is Fatima, and basically I'm just starting study business and information technology. So my question will be really simple and cute kind of question. Entrepreneur has a really basic skills. So but you think that this is my skill, like critical problem thinking or risk-taking skills or something, customer service skills. What do you think that this is my skill?
No, that's a very difficult question. I don't know if I have, or probably I can't pinpoint what skills I have, but what skills the founder should have. Not the technical founder, but generally the CEO. They should know how to sell. I think that's the only skill that they need, and they should be very comfortable in networking. I, by nature, am an introvert, or used to be an introvert, but being a founder changed that a lot because I can't survive without talking to people. I have to talk to investors, I have to talk to businesses, I have to come here and talk, etc. as well.
I'm an introvert also.
Yeah,
so
and most of the founders, naturally you'll meet, I don't know, for some reason they are introverts, but they've been, eventually trained by their startup to, do it otherwise. So if you know how to sell, you'll do really well. And it's not just about selling to the customer, because every time you're pitching in front of an investor as well, you're selling your company, right? You're selling your idea. You're talking to other businesses. You're talking to your consumers. You're
selling yourself as a founder, actually.
You're selling yourself as a founder, actually. That's on spot. And then secondly, be good with numbers. I have a background in accounting and finance. I've done some CFA as well. If I hadn't done that, things would have been a lot more challenging. But then again, I'm in the lending business, so it might be different, but you should be good with numbers, because the CTO will never be good with numbers, right? It's not their job. So if you're two founders and one is a technical one and you're probably the CEO who's responsible for onboarding investors, who is doing business development initially as well, being good with numbers is going to come in handy almost in every single conversation that you have. So I think those two skills. Other than that,
leadership, I think also, because the founder also need to build teams,
I mean,
guide them a little bit, and
yes, but
have them onboarded.
That's I would agree. Yeah, yeah. Then again, that
somehow
you can still go, survive without it. A lot of founders, a lot of SATs that we see around us, they have built brilliant companies. Not all of them are leaders. They might be good managers, right? But they don't have the leadership quality. So that might not be on top of my priority list. Of course, you need to run a team. I think that being a founder or being a CEO, that's the most difficult job to do out of everything that we do, running a team, because different people, different background, different expectations. You're trying to manage all of that and managing the business as well. But then again, you can still survive without that. At least I think so. Then again, I've never worked as an employee for long, so I'm not the right guy to answer this question.
And I have the opposite problem, because I'm an engineer, so I'm so bad with numbers. So, but I couldn't succeed without understanding at least and putting on Excel sheets what are my expenses, what are my revenues, how much I'm gonna survive with this capital. You cannot go without it. At least a basic knowledge and just like understand how long I'm gonna survive with this capital regarding my expenses, my revenues, the salaries, maybe having some freelancers. I'm doing this right now and I'm like struggling with it. But I think that you cannot build a business at least without understanding a little bit of this and tracking it at least for the first 6 months, 1 year, till you have a CFO or someone who's taking care of your finances. But every entrepreneur, even like a freelancer or someone who has a restaurant, if he's not tracking his expenses and revenues, he's dead at the point. So this is like just for engineers, because maybe a lot of geeks and engineers people, you need to understand a little bit of numbers. Absolutely, otherwise you're not going anywhere.
Yeah, I agree.
Any other questions? Otherwise we can just like, okay, thank you. Just we're gonna have maybe the last question, but we're gonna stay like a little bit networking. We have some snacks and we can talk. Last question. Thank you.
Hi, my name is Usman. I have a question related to KalPay. You just said that the second largest bank, which is Bank Alfala, had not much of credit cards in the market. So my thought on that is that I think it's on the national level, it's a mindset that, for example, I have a credit card, I'm a job person, my father is the sole proprietor, he still does not use a credit card just because he thinks it's not allowed in Islam, or there's a certain religious reasons that people don't use credit card. So don't you think on a national level, we need to have campaigns that basically clarify the gray areas of lending and credit cards and everything?
Yeah. All right, that's a great question. So there's a reason why people don't use credit cards, and you said that rightfully. A lot of my friends, they're doing great jobs. They have a big business. They don't use it primarily because they think it's Sharia. It's not Sharia compliant. Although there's nothing wrong with the credit card as long as you're paying on time. So unless you delay your payments and they start putting an interest on your total bill, there's nothing wrong with the credit card. It's actually basically free of cost credit for you for up to like 40 days. Why wouldn't you use it? It doesn't make sense, right? So that's the first thing. The second thing is Mizan Bank, I think, has done a brilliant job in terms of telling people about Sharia compliant banking. But then again, the issue with that is every time you talk about Sharia compliant financing,
sorry to cut you, but Mizan Bank does not use the word credit card, so they still give.
Mizan Bank doesn't have a credit card. Wasssl Bank does.
It's like debit card, I guess.
It's just like a debit card.
The money
You're just using your own money with that. I think they've done a good job. But then again, whenever you're talking to a normal consumer about Islamic finance, do they say, "Ke kaan yahan se pakdo, yahan se pakdo?" So they don't know how Islamic financing works, because they think if you're charging a customer anything on top of a retail price, that's interest. Although that's not true, because fundamentally, when you're going to any shop and you're going to Al Fatah, the product that you're buying for 500 rupees, Al Fatah never bought it for 500 rupees. They bought it for 450 rupees. They kept their margin on top of it. So the very basic concept of Islamic financing is that there should be an asset involved in that transaction. So it cannot be cash on cash. I can't give you 1 tola of gold and ask you for anything more than that. So it can't be on gold, it can't be on silver, it can't be on cash. But if there's any product involved, naturally that's how I turn this into a trading contract. I buy a product, it's in my ownership, does not need to be in my physical ownership. As long as it's in my contractual ownership, I can sell it to you at a higher price. That's my right, and there's nothing wrong with that Islamically, because that's what trading is, right? And then the second thing is there's nothing wrong Islamically with installments. You can choose to pay me back over the next 9 months. That's perfectly fine. So these are the two basic principles. Another thing why I love talking about Islamic finance is because at the core, it's all about ethical financing and ethical ways of conducting your business. If you take a rickshaw ride from COLABS back to your home, and if you don't agree on the fare before you sit in that rickshaw, that transaction in itself is also not Sharia compliant. Because by the time you reach there and you ask for 1,000 rupees and you say, no, I'm going to give you 700 rupees, there's a concept in Islamic finance जिसको हम उर्दू में जुल्म कहते हैं. So he might think that, उसके साथ जुल्म हो रहा है, and you might think, I don't want to pay 1,000 rupees because he's overcharging me. So that's what Islamic financing tries to eliminate, that everything should be signed off before you get into that transaction. And then, it needs to be in your ownership. I cannot borrow a product from someone else and sell it off to someone else because it's not legally mine. So there are a few basic principles in Islamic financing which revolve around making a business transaction or business conduct very ethical. That's why Islamic finance, I think globally, is very important. There's no concept of accrued interest, etc. Saves the customer, who's using those credit facilities. So yes, we need to talk a bit more about that. We need to be more vocal about it. I think banks, being the bigger players, they need to talk more about it, spread awareness, because it's going to take a lot of time.
I feel.
Yes,
it's like kind of a taboo.
But then again, keep in mind, a lot of the people around you, they've taken a loan from, probably, if not a bank, then from an informal lender at much higher interest rates.
Family and stuff.
Anyone you're going to talk around, if you go step out, they would have taken one loan in their life from Wasssl Electronics, probably for a bike. Most of the bikes that you see on the roads, they are on installments, they're not on cash, right?
But that is because they have what we say,
majboori,
right?
So that means there's an appetite to take loans as well.
Yeah, but what I'm trying to say is that there's a lack of knowledge all around us, that we need to work on education on a very deeper level when we are growing in schools and universities. Tell people that it's okay to have loans, it's okay to have a credit card, you can use it. Because I have seen a lot of my colleagues are very well educated, but they don't use credit card or any kind of loan just because they think that it's not a...
Sorry for answering this, the issue is that
you can do it in Urdu.
Whenever you're talking about religion, it's a very scary topic to talk about, because Islamic financing also has many different schools of thought. In Pakistan, it's different. In Saudi Arabia, it's different. In Malaysia, it's completely different. So, Saudis are very strict with Sharia compliance when they talk about Islamic financing, right? So it also depends on the kind of school of thought that you are following. For example, very quick use case. If I charge an additional fee if you're late with your payments, some school of thought say that's perfectly fine, as long as you donate that amount. So it cannot be a part of my revenue. If I charge you a late fee, if I can donate it, that's perfectly fine. Saudi says no late payment fee at all. Some say that you can also add a percentage of that to your revenue, because if a customer was late, you incurred some expenses to recover that money, right? So it can be a part of your revenue. So there will always be some sort of, whenever you talk about religion, there's always going to be a gray space there, right? So some things are very clear in Islamic financing. For example, you cannot take a cash loan and pay or charge something on top of it, but there's a big gray area as well. So then again, you can't argue on that with anyone, and that's naturally not what we want to do as well. We look at it from a particular way. We have a Sharia board that approves our transactions. There might be some people who still think that it's not Sharia compliant. That's not the kind of argument I want to get into, to be very honest, at least in Pakistan. It's scary.
Thank you very much. Thank you, Shershah, for answering the questions and also being so open and transparent about sharing things about your company and the journey you've been through. Thank you, everyone, for being here. It's going to be a little bit late, so it's 7:30. So we're going to stay here for like a few minutes to share some drinks and snacks together. And thank you for being here. Thank you.